Timing the markets is always tough. Emotions can play a big part when it comes to investing. We often get the urge to sell when our investments begin to lose value. Or we look to buy as things get more exciting and the value of investments go up. That's why today I'm going to be talking about 3 tips to avoid trying to time the markets. Fall back on your long-term plan. As exciting as it may seem to try and trade the ups and downs of the markets, especially as things get more choppy, just remember what you're trying to achieve is long-term average annual returns that are specific to your financial plan. Taking on that additional risk of trying to catch the market at the right top or the right bottom might set you off course as you try to play too much with your values of the investments in your portfolio. Stay the course and make sure you avoid utilizing your emotions for wrong decision making. It's hard to be right twice. So if you do happen to catch the top of an investment and sell at the right time, or buy at a bottom, just know it can be very difficult to be right a second time when trying to short-term trade an investment. More often than not, if we sell an investment, it can be very difficult to find that right opportunity to buy again. If it goes up a little bit, will you avoid that investment completely, or can you be patient and wait for a pullback to re-enter? When you try and time the market, you'll have 2 critical decisions to make: when to sell and when to buy back in again. This can be very difficult as when most people sell, if it goes up a little bit more on your investments, you may be inclined to not buy back in for the long term. Here you'll be missing out on some upside potential on a very good investment. Now, if on the other side of this, that investment does fall, you'll have to have that discipline to know when to pull the trigger and get back in. Sometimes you might end up getting in too soon and it can fall even lower. So why try time the investments? Stay in it for the long term and you'll do well as you move forward. Invest on a set schedule. As enticing as it may be to try and catch the top and the bottom of markets, this is a very difficult thing. One strategy that you can use to help you avoid trying to time the market is dollar cost averaging. As a university employee, you've already got this covered. Parts of your paycheck each month or bi-monthly are going into the university plan and getting invested for you. The nice part about doing this instead of trying to time the market is you are naturally catching both tops and bottoms of the market. So overall, as you keep investing along that curve, you will be having a lower average price for your investments, giving you a greater opportunity for growth. Hopefully today you learned a couple of the tips to help you avoid trying to time the market. Although we all have dreams of being perfect in our stock picking and buying and selling at tops and bottoms, most of us don't end up with the fortune and fame of timing the market. Stick to your long-term plan and make sure you do what's best for your long-term situation. If you have questions, reach out to me. I'm here to help.